Good evening, my fellow YouTube viewers. What I wanted to talk to you about today was the debit and credit rule, and this falls in line with the accounting equations and the 5 general ledger accounts that we have. Basically, what the debit and credit rule means is anywhere you have a debit, you have to have a credit with that same amount of money somewhere else in your accounting system, and vice versa. So anywhere you have a credit, you have to have a debit as well. And so there are actually rules devised to determine what is going to be a debit and what is going to be a credit in double entry bookkeeping. So a lot of people don't know this. So what I thought I would do is I would make a video on the debit credit rule. So in a previous presentation, we talked about the 5 accounts in your general ledger account. And these 5 accounts would be assets, liability, and equity, which would have been found in your balance sheet, and revenue and expenses, which would have been found in your profit and loss. So for your assets, if you're increasing your assets, then it's going to be a debit. If you're decreasing it, it's going to be a credit. But you have to remember, somewhere else in the accounting system, you're going to have a credit with that same amount of money. With your liabilities, if you decrease your liabilities, it's a debit. And if you increase your liabilities, it's a credit. With equity, if you decrease your equity, it's a debit. If you increase your equity, it's a credit. With revenue, if you decrease your revenue, it's a debit. If you increase your revenue, it's a credit. With expenses, if you increase your expenses, it's a debit. And if you decrease your expenses, it's going to be a credit. So basically, what would happen is, we'll say if you wanted to buy a piece of equipment, well, that would be an asset. So if you purchase that piece of equipment, you would debit your asset account to say that you had purchased that equipment. But if you had purchased the equipment from the bank, you paid money from your bank account to purchase that. In addition to increasing your asset with the debit, you would also have to decrease the bank with the credit. So every transaction is going to be a debit and a credit with that exact same amount of money, and it requires a lot of analysis. And basically, they use the debit and credit system as a system of checks and balances to make sure that they must balance out. Your debits must equal your credits, and that's done at the end of the month or the end of the accounting period, where they have your trial balance. And in your trial balance, your debits must equal your credits. If they don't, you have to go back and find out what went wrong. And if there was a mistake, then you have to go through and do a journal entry to record the mistake. So that concludes this presentation on the debit and credit rule, and I hope that you got some